Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, OpenAI releases a slew of policy recommendations to help navigate the AI era. We'll discuss with its Chief Global Affairs Officer, Chris Lehane, later this hour.
Plus, Oracle names a new CFO to help the company navigate massive data center development plans and a cash crunch.
And NASA's Artemis II is set for the first lunar flyby with astronauts on board in more than 50 years. We'll discuss what to expect.
And all of this amid the context of global instability, concerns about the Middle East conflict, and indeed a market that is on edge, hopeful that ceasefire could be upon us, but still we're seeing the latest rebuttals coming from Iran. We're still holding on to gains, up 0.4% on the Nasdaq 100. I'm looking at Bitcoin holding above that level of almost 3% higher, but just sub the $70,000. But there is optimism in the market. Is it right to be had at the moment, Ed?
The headlines on the terminal this morning is about Iran rejecting a ceasefire and wanting a permanent end to the war in Iran. Let's bring in Bloomberg's Tyler Kendall out of Washington, D.C. That's where we're at. You know, there is a back and forth between which each side wants. From the president's perspective and from the United States of America's perspective, what is the latest, Tyler?
Hey, Ed. Well, at this point, it's not necessarily surprising that we heard from Iranian state media within the last 30 minutes saying that Iran has rejected a ceasefire proposal, because earlier this morning, an Iranian official came out and said that, quote, no rational person would agree to a ceasefire, accusing a short-term agreement of being in favor of the U.S. to give the U.S. time to regroup. But this is really raising questions as we get closer to President Trump's now extended deadline of tomorrow at 8 p.m. Eastern for Iran to make a deal amid U.S. threats to hit Iranian civilian infrastructure. So we'll have to watch where this goes from here. President Trump is set to brief reporters at 1 p.m. Eastern, where we may be able to get some more of our questions answered, because Axios is now reporting that Iran has instead submitted a 10-point plan to the U.S., which U.S. officials are calling maximalist in their demands. We don't have the details quite yet on this proposal, but we know previously Iran has demanded, for example, to have sovereignty over the Strait of Hormuz, and that appears to still be the biggest sticking point. We've heard from Iranian state media over the weekend saying that Iran needs to have payments for war damages that they are seeking to be repaid through tolls charged on ships going through the strait. There has been a little bit of progress. As you well know, Bloomberg News crunched the data and are now saying that we have seen the highest amount of traffic through the strait this weekend, but it is still falling well below those levels that we saw before the war began.
Bloomberg's Tyler Kendall with what you need to know in terms of geopolitics. We thank you. Look, as tensions in the Middle East remain elevated, to say the least, investors are weighing what it means for the markets, for risk appetite, and the outlook of big tech. For us on this show, Ed Ludlow's person to talk to about it, Argent Capital Management, joins us now. You help manage the large cap equity fund over there, and it's a tough time for anyone trying to navigate these markets. When will big tech manage to go back on the upside? We had a strong week last week, but will that last?
Yeah, I think that's probably the biggest question facing the market today. Heading into earnings season here in 2 weeks, I think investors in big tech, the big CapEx spenders especially, Amazon, Meta, Microsoft, Google, investors want more confidence that those humongous CapEx spending plans are going to pay off, in higher revenue and higher profits. And there are initial signs of that, but not enough to get investors over the hump. And so this is a really big earnings season for them. They, announced last quarter, humongous increases, 60, 70, 80% increases in CapEx for 2026. Investors want to see positive revenue estimate revisions, to follow that. And I think AWS and Google's GCP in particular are going to show us that in the first quarter, with more to come later in the year. And then Microsoft is more of a mixed picture, because over the last year, they've kind of reprioritized their own model development within the company after their OpenAI agreement was renegotiated. So right. A little bit of a messy picture with Microsoft, but I think we're going to see clear signs of acceleration for AWS and GCP.
And that will be the catalyst enough to put the geopolitical angst to the sidelines for big fund managers, you think?
I think it has the potential to be. Investors have been disappointed in Amazon and Google and Microsoft over the last year because their free cash flow estimates have been declining because of those really big CapEx increases. I think that trend is going to reverse here as 2026 progresses, and I hope that the first quarter is kind of the first tangible sign of that.
Jed, state of play is the Nasdaq 100 down more than 4%, modestly underperforming the S&P 500. Chip stocks up 11% year to date, in part because of memory probably earlier in the year. What I'm trying to get a sense of is how micro-focused investors in the technology sector are on the war in Iran, or if they're already looking past it anyway at other structural and spending issues that you just outlined in part with the hyperscalers.
Yeah, I think prior to the war breaking out, tech was underperforming meaningfully from the start of the year to the start of the war. Since the war broke out, the last 25 trading days or so, tech has performed better relative to other sectors. I interpret that as the market being more concerned with AI and its really fast adoption within our economy, and the positives and negatives there more so than the impact of war.
I have to ask you about some of the IPOs waiting in the wings. There was a lot over the weekend on the social medias about the relative performance of some public names might be indicative of investors getting themselves ready for a SpaceX IPO in June. We reported just last week that the S1 filed confidentially, it's going to be June. Is that something that actually happens in markets where people are like, ooh, I better have some cash ready for this?
Yeah. I think perhaps the most fascinating tech question in 2026 is where's the money going to come from for the SpaceX, Anthropic, and OpenAI IPOs? And I think an obvious first thought is the rest of publicly traded tech. Do investors pre-trade that to the extent you're suggesting? Trades happening in March and April for an IPO that will come in June and then perhaps the fourth quarter in the case of Anthropic? And
I'm not suggesting, Jed. I'm asking. I've got no idea because I don't participate in the markets. That's why I want to ask you. Yeah.
I doubt it, personally. We're not doing that at Argent Capital. We will consider Anthropic and OpenAI and SpaceX, but we wouldn't pre-trade it by a couple months and get that cash lined up with that duration. That's not necessary for us.
What's so interesting is they are, yes, a space-focused company, and I know you have exposure to space and aerospace more broadly in the fund, but we've got three of the biggest players in AI all coming to the market at the same time. Now, interestingly, Jamie Dimon's been putting his very long pen to paper or typing away for his annual letter to investors. And today he did talk about AI in many ways, and I want to focus in on the investment side because he's saying it's not a speculative bubble. But at the moment, you can't see who the winners and the losers are actually going to be in AI-related industries. Do you think that's right? Can you not discern who the winners are yet? Yeah,
I think those comments stuck out to me and really spoke to me. I think that he gave a pretty accurate description of what's happening in tech today. I think that in any investing environment, there are certain companies that fit in the too hard bucket for investors. There are too many unanswered questions. There's too much uncertainty. Investors decide, I'd rather be on the sideline. I don't want to invest in this right now. Today, it feels like that too hard bucket is really large, much bigger than normal. And of course, software is in the too hard bucket. I think insurance brokers are in the too hard bucket, and a whole bunch of other sectors and industries where investors are not sure if AI is going to be a net positive for these businesses and industries or if it will be a net negative. And so we've seen valuations compress significantly for software, most notably, but many other industries and sectors too. So his comments today, just I think it was a good kind of description of where markets sit today. That too hard bucket is really big. His comments indicate he sees a lot of companies in that too hard bucket, and me as an investor, my response to that is I think that smells like opportunity in many ways. I think investors are starting to pick through the rubble as it relates to software in particular, and I think there's a lot more of that to come in the future. There are software companies whose competitive position will erode because of AI and the reduced cost of software development. But I think there are other software companies that are going to adopt AI, integrate it into their product set, improve the offerings for consumers, and grow and thrive.
Right. Jed Ellerbrook of Argent Capital Management, thank you very much. Now, coming up, the world faces an era of AI upheaval, but fear not. OpenAI is out with a set of policy recommendations to put people, real human people, first. We'll discuss that next. This is Bloomberg Tech.
OpenAI says it's working to, quote, ensure AI benefits everyone. And it's now rolling out policy recommendations to address the rapid social changes AI is driving, from jobs to regulation For more, Bloomberg's AI reporter, Seth Figman, joins us now. You're not a reporter, you're an editor, and you're help managing the team in many ways. Seth, I'm really interested on the why now. This is a lot of proposals, conversation starters, the intertwining of public-private partnerships. But why are they putting it out now?
Yeah, I mean, certainly the rhetoric from OpenAI and elsewhere is that we are moving very fast towards more advanced AI systems. OpenAI specifically is supposed to be working on a new model in the coming week, so it could partly be a way of getting ahead of that. Keep in mind that what they're saying here is still hypothetical. They're talking about a more advanced form of AI called superintelligence that would outperform any person on Earth at any task. We're not there yet. But these proposals are just that. They're trying to shift the discourse a little bit and trying to incentivize bigger ideas, a new social contract, if you will, that they seem to liken loftily to the New Deal.
Seth, a lot of OpenAI news over a long weekend in the United States, a reshuffle in terms of leadership and management, two health-related and one sort of strategic. Just update us as best you can.
Yeah, I mean, a lot of news right before the holiday weekend. You know, Fiji Simo, who has really been sort of a fast, growing influential figure in the organization, is stepping back for a short-term medical leave. She was previously the CEO of Instacart and has been really instrumental in a lot of their product and business initiatives. Brad Lightcap, who we've certainly had on our air before, the COO of the company, who had assumed some of the CEO responsibilities over the last year and change, is now stepping into a new special role where he'll help oversee partly the efforts to bring AI to more businesses through a joint venture with PE firms. And then their CMO is stepping down permanently to deal with her recovery from cancer. So it's a mix of factors here, and stepping back is a meaningful shakeup at a time when we understand this company is moving ahead with plans for possible IPO and just closed the largest funding round that we have ever seen.
All right, Bloomberg's AI editor, Seth Figman, thank you very much. Another story out this morning. Oracle has tapped former Schneider Electric EVP Hilary Maxson as CFO, and that's effective immediately. For more on the move, let's get out to Bloomberg's Brody Ford, who covers Oracle. Hilary Maxson, interesting appointment, but I think the bigger story is, Oracle has a new CFO at a critically important time for managing Oracle's finances. What do we need to know?
Well, you got to remember, Oracle's going through a pretty gnarly financial situation, right? I mean, they are transitioning from an asset-light database company to one that is going through tens of billions of dollars in data center development, and they've had to issue equity. They're doing thousands of layoffs, and so they're navigating a pretty complicated financial picture, and it's not shocking to see a new leader for those finances.
Yeah, the expertise that she brings in particular, the background, and where really her focus will lie, you think, Brody?
Yeah, well, I think that's really interesting because, they didn't pick a software CFO. They picked someone with heavy industrial experience, and that's effectively how the biggest tech companies are operating now, right? They are heavy industrial companies with massive CapEx books, and it makes sense that they would bring somebody kind of outside the software world to navigate that.
Brody Ford, across all things Oracle, as you always are. Thank you very much indeed. Now coming up, SpaceX. It prepares for its launch into the public markets. That says more than $2 trillion valuation potentially. We'll discuss expectations for its listing and other mega public debuts. That's next. This is Bloomberg Tech. Elon Musk's SpaceX. Well, it's meeting with banks today, we understand, as the world's most valuable startup gears to pitch potentially the biggest ever market debut. Let's get the latest Bloomberg's Bailey Lipschultz. So we understand much is on the table, much has been asked of banks, not just only advice, it would seem, in some reporting. But what are we likely to get in terms of a sense of when they could come, how significantly they're going to get to this $2 trillion number?
Yeah, so what you'll see play out over the coming weeks is these so-called testing the waters meetings. So basically, bankers will meet with their pitch decks, show investors and say, hey, look at TerraFab, how exciting are orbital space data centers and what the ultimate vision could look like. It won't necessarily focus on actual valuation just yet, but it'll really center on the financials, financial forecasts, what 27, what 2028 could look like, given the expectations that this should price in June. So the next kind of march forward would be waiting for that formal flip public, which would then kickstart, call it 22 days to going public. So that's the next key milestone. But we're going to be talking to investors, talking to sources, trying to understand what these meetings look like while the company awaits a formal response from the SEC, which would then kind of move this along.
We reported, right, in the middle of last week that the confidential filing's in. Then we reported that the valuation being targeted is climbing above $2 trillion. But all of those little bits of reporting would indicate what you just talked about, that June is happening. What else would give us confidence that a June IPO is realistic at this point?
The big thing, Ed, is that it'll take a month typically for the SEC to give formal comments. So they filed the middle of last week, call it the early first few days of May is when they would get that filing response from the SEC. It would be up to the company and up to its lawyers to address any qualms from regulators to really set the stage for what we call a formal public flip, which then kicks off, again, a 15-day waiting period before a formal marketing could take place, and then the deal could be priced. So the big thing to keep in mind is if there's any holdup with the SEC, that could delay this process. But from our understanding, the company wants to move as quickly as possible, which would then mean a public flip where you formally see that S1 on Edgar and kind of being breaking news sometime in mid to late May, which would then set the stage for an IPO to price and the company to start trading at some point in mid to late June.
Obviously, retail investors get excited. But who are the big players that are likely to be talking to at the moment? There has been reporting of big anchor investors who are being looked for.
Anyone and everyone will be kind of tasked with investing. When you're looking to raise $75 billion, that's more than double the largest IPO of all time. And when you look at a book that, according to our reporting, they could try to sell about 30% to retail, that's more than $22 billion. So you're still solving for a $50 billion problem, whether that's sovereign wealth funds around the world, whether that's institutional investors, and also, oh, by the way, probably being pitched to some of the largest strategic investors, just given the propensity for XAI, orbital data centers, and kind of the grand vision that Elon Musk is pitching.
Bloomberg's Bailey Lipschultz, thank you very much. Let's stick with expectations for a SpaceX IPO and other possible mega listings this year. Lee Spire is with us. She's the founder and partner at IPO advisory firm Class 5 Group. Bailey was just talking about the Test the Waters meetings. And one of the things we've tried to report on in some detail over a number of years, it's not new, is the revenues breakdown at SpaceX, right? There was a point where it went from mostly launch to mostly Starlink. What I'm seeing and hearing right now is Starlink at the top end tracking to maybe $20 billion of revenues this year, you know, if they exceed. How do you price an IPO on that data?
It's the perfect question, and thanks for having me here. First of all the numbers we've seen so far are leaked numbers or rumored numbers or through the grapevine. Until they flip that document public, we aren't really going to know what any of the numbers are. And then until they go out, as you just heard, and meet with investors and test the waters, we're not going to know what the bank's expectations are for 2027, 2028. I presume they'll go out much further. But none of the numbers that are being bandied about in any way fundamentally correlate to $1 trillion or $1.5 trillion or a $2 trillion
right
valuation. It's all hope. It's all, do we believe the vision? It's all, do we believe that they will have limited competition, which we know there's more coming? So it's a leap of faith, and there's going to be a lot of FOMO here. And the best way to look at how to value it is to go way back to 1934, where you look at Graham and Dodd, who wrote the book on fundamental securities valuations. And they had a great comment that was applicable during the internet phase, and it's applicable now. And it's, hey, look, there are times, I'm paraphrasing, but there are times when there are new fields of endeavor, new companies in areas we've never seen before. And investors can, in fact, make a lot of money if they are involved early enough. But everybody needs to understand it is not a fundamental investment. It is a bet. It is a speculative bet. And that's what money at these valuations will be going into SpaceX. You roll a dice, right, and you say, you know, Starlink's pretty cool.
Really? You think, Lisa, this is rolling a dice situation? That's certainly not sort of going to be being discussed with banks talking to investors today.
There is no math that correlates the current revenues to $2 trillion. None. So yes, it's a bet on the future. And it's a compelling and potentially fascinating and enormous and also very uncertain future.
Lise, typically before a big IPO of a late stage startup, they would raise a big round, right? Largely to bring in the crossover investors. In this case, SpaceX merged with XAI, which changed the valuation dynamic, brought debt onto the balance sheet, etc. What was your assessment of that transaction pre-IPO?
Typical Musk, I would say. I think, again, until we know what the math looks like, it's very hard to make any sort of a sound assessment. It's clearly bundling things together, and heaven knows he's done pretty astonishing things in the past that have worked out and some that haven't. So we don't yet know. And again, I've not been on the Test the Waters meetings. Maybe they're explaining this, but how the two are going to interact such that 1 and 1 equal 8.
Does this have read across to any of the others in the pipeline, Lisa? Or is this very much your view on Elon Musk and this bet on SpaceX? Because there's also a bet on XAI, and we have plenty of other AI companies potentially waiting in the wings.
So from a general sense, when you have a very large IPO, and we've never seen one like this before, but we've had Alibaba, we've had Facebook, we've had we had Saudi Aramco, although kind of a very different industry. When you have a big IPO that goes well, as Alibaba did, usually a number of the companies in the wings put the foot on the gas and say, we're going to take advantage of the fact that investors are feeling good about IPOs, and you see much more activity. When you see a larger IPO that stumbles out of the gate, as Facebook did, people and companies go back into hibernation for a while. So this could be the opening of the door that certainly bankers would love to see, but we have to see how it plays.
Lisa Buyer, it's been fascinating talking to you, partner and founder at Class 5 Group, about the lineup that's currently happening with all things public markets. Let's have a quick recap on the public markets right now as to what's happening when President Trump has been speaking. Some headlines have been coming out moments ago, part of the White House Easter egg roll, but of course, conversation has moved into the world of Iran. We understand that President Trump currently is saying that Iran has some missiles and drones left, and the Iranian people will fight the regime when it's safe for them to do so. But more broadly, he's talking about Iran cannot have a nuclear weapon, Ed. He's also talking about his popularity right now, the American people wanting the US to win and to come home, and more broadly, that he'd like this end to the current conflict, Ed.
Okay, coming up on the program, we speak to Chris Lehane, OpenAI's Chief Global Affairs Officer, as the company releases social and economic policy proposals for the AI era. It's halftime in the program. We'll be right back, and this is Bloomberg Tech. Welcome back to Bloomberg Tech. In an era of artificial intelligence upheaval, OpenAI is proposing ways to spread the benefits of the technology and put people first. To start, it's published a set of policy recommendations ranging from a public wealth fund and expanded safety nets to shorter work weeks and faster electrical grid development. For more, OpenAI's Chief Global Affairs Officer, Chris Lehane, is with us here on Bloomberg Tech. I mean, they are proposals, they're not formal proposals. But what I'm trying to understand with this, Chris, if we get the idea, is how everyday people would participate in it. Who enacts it? OpenAI or government? But you're talking about people whose lives are impacted themselves by AI participating in it. Explain it.
Yeah, that's exactly right. Let me take a step back. And Caroline, thanks for having me. So first and foremost, what this document really reflects is the work and thinking of OpenAI's researchers, the folks who are really building and innovating this AI technology. And I think they understand and recognize that this is technology that's on par with historic general purpose technologies of the past, the wheel, the printing press, the combustion engine, electricity. You know, each of those ultimately drove the human condition forward by driving economic progress. But every time one of these technologies came along, there was obviously challenges that came with it. And so what this document really is attempting to do is to put out some concepts and ideas that are really as transformative as the actual underlying technology. And so it's divided into two sections. One section really deals with an open economy, which is what you are talking about. How can we make sure AI is free, fair, safe? How can people participate as much as possible? And, the sovereign wealth fund idea, is something that we really took from what we had seen in Alaska with the Alaska Permanent Fund, where the entire population of Alaska gets to participate and the economics of the fossil fuel extraction in Alaska. But ultimately, there's a whole range of ideas. One of the, I think at the core of all of this, though, particularly on the economic opportunity piece, is the understanding that AI needs to be understood as a right that everyone in this country, everyone in the world, has at least the opportunity to be able to participate in. And that's really what's fundamental to this.
I mean, Chris, a public or sovereign wealth fund is a very specific proposal. Have you discussed that idea with anyone within the administration? Who within the administration have you discussed that with?
Yeah, I'm not going to get into specific names, which may be a shock to you, but we have certainly had those conversations with folks both in the administration. You obviously have the Trump accounts, which is a version of some kind of a fund. I think in the last 2 or 3 weeks, I've probably met with 2 dozen, actually, as I think about it, members of the United States Senate, where we've been talking about these types of concepts. And I think what's really going on right now is that there is a growing awareness from policymakers, particularly in Washington, D.C., of just how fast this technology is accelerating, the scale that it's going to be impacting all of us, and an interest and desire to really up-level the nature of the policy conversations. To date, the conversations have really been almost binary. On one hand, there is an approach, keep your hands off, don't worry, everything's going to be great. On the other possible extreme, there is the doomer view, which is that this is technology that's so powerful, only a small number of people should control it. We're really trying to put out a different approach, and this approach is based on actually offering solutions that are going to meet the technology, where the technology is, but doing it in a way that's inherently small d democratic, working through the democratic process to actually identify the ideas that will allow this technology to benefit as many people as possible. And that's really what we're trying to put out here today. And this is a conversation starter, as you were alluding to. We don't pretend to have all of the answers. Certainly people have smarter ideas. People will pressure test these. But we do think we need to open up that proverbial Overton window so that we begin having these conversations now so that we can identify the solutions quickly, given where the technology is going.
The now is interesting.
Yeah.
Was the now prompted by this growing awareness that this isn't very popular with the general public right now? Or is it a now because you've got something coming, the models are updating, an IPO is on the verge, and therefore you need to get ahead of the policy perspective too?
It's really the latter and not the former. I mean, certainly when you talk about and you look at the underlying data, those who use AI tend to have a pretty positive to very positive perspective on it. And, we're nearing 1 billion folks who are using this on a regular basis. So as more and more people use AI, obviously perceptions of it, understanding how it's going to impact education, healthcare, their daily lives grows. But this is really at the core, and again, this came from our researchers who are really understanding where this technology is going and how quickly it's moving in that direction, that we do need to begin to identify those ideas, those solutions, those concepts that are going to meet the technology where it is. I mean, I've said this, but this technology is transformative. We're going to need policy ideas that are equally transformative. And if I could, I mean, maybe an analogy here is the New Deal. And I don't mean the New Deal in a sense that we believe that there's big government solutions for this. But what the New Deal ultimately recognized was that as technology drove industrialization, there really needed to be a calibration or perhaps a recalibration between the allocation of capital and labor to make sure that the social contract was really in balance.
And you want labor to have more of a voice.
That's how we're thinking. I'm sorry.
You want Labour to have more of a voice, Chris. And what's interesting is others are speaking to this too. Jamie Dimon putting out his letter to shareholders today, also talking about his view that this is moving quickly. It could eliminate some jobs. And his firm has got definitive plans on how we can support and redeploy our affected workforce. How is other business going to play a role, Chris? And also, what are the governments doing? You look at this from a global perspective. Where is doing this right versus the US?
Caroline, it's a great question, and I think you can see interesting pockets around the world. When I travel to Asia, Japan, or Korea, you see a real focus on driving up AI literacy, raising the amount of people in those countries who actually understand how to use AI. I think Japan has a goal of 80% of its country are graduating students literate by 2030. You go to places like Estonia, which has always been a digital forward country, they're building AI into their actual government infrastructure. Greece, we've spent a lot of time with the Prime Minister of Greece and his government. He's in the process of building AI into their public education system. And so you're seeing pockets of this. But again, I think part of what's behind this release of this particular document is our belief that we really do need to scale up the kinds of conversations that are taking place, so that we're actually able to meet this technology where it is and moreover where it's going.
Chris, there's been some reporting from The Information that your CFO, Sarah Fryer, has some concerns about the spending plan over the next few years and the reality of a timeline to IPO this year in disagreement with Sam Altman, your CEO. The report also details that Sarah Fryer was excluded from some finance or investor meetings as a result of that disagreement. What can you tell us, please?
Yeah, so first of all, I'm actually blessed and privileged to work with an incredible team, not just in terms of the talent, but how well everyone really works together. Perhaps the greatest validation of both the team, our researchers, and really our overall strategy is that last week, as you all covered, right, we announced the single largest raise in history, $122 billion. And at the core of that, I think, was the validation of our focused, our really laser-focused strategy, which is on compute. Compute is really Sam's insight. He deserves enormous credit for this. He was there long before anyone else, that it is the most finite and most precious resource when it comes to the intelligence age. And we have focused a lot of our work on making sure that we have access to that compute. That compute drives a flywheel, right? For every quantum of compute we get, we effectively get a 3x in revenue. And it works the following way. Compute drives innovation, what our researchers do. That then leads to more tools. Those tools lead to more users, right? We were the first to 10 million, first to 100 million, approaching.
I think we've lost Chris there.
Approaching.
Chris, you're fine. Your Zoom froze for a moment there, but I'm going to go back to my question. Sarah Fryer was or was not excluded from meetings because of a disagreement on strategy with Sam Altman?
We just raised $122 billion, and Sarah Fryer was at the center of all of those meetings, pulling all of those conversations together. It's awesome to see the teamwork that exists between her, Sam, Fiji, our head of applications. And as I said, it's I get to work with a dream team in terms of the talent and how well everyone works together. And again, $122 billion. It's not the amount of money, although that is a large amount of money. It is the fact that you've had probably one of the most impressive cap tables in the world. Take a look at our business strategy, take a look at our leadership, take a look at our researchers, and really give us a huge vote of confidence. I mean, think about where we are from a revenue perspective. In 2024, I'm doing this off the top of my head. I think we had $1 billion in revenue a quarter. We're now doing $2 billion in revenue a month. I mean, you just haven't seen growth numbers like that historically.
Let's talk about the talent, because it's got bigger, and there has been reshuffling, and our thoughts go to those with health issues, particularly Fiji as she takes a step back, Chris. But TBPN, that's coming under your leadership.
Yeah.
Why?
I'm so excited for this, Caroline. I am so excited for this. I'm excited for it for two reasons. On one hand, these guys, Jordy and John and their whole team, do as good a job as anyone out there in unpacking the why and the how behind technology and explicitly AI. I think folks come on to other media outlets. I mean, you guys do an incredible job of breaking news and scooping news. What these guys do is really break down ideas and scoop out what's behind those ideas. And at a time, and this even relates to the beginning of this conversation on the document that we put out today, at a time when we really need to be scaling how the world understands AI, these folks do one of the best jobs out there. We want to give them the resources so that their audience grows. And the second point here is that I'm able to bring in-house, really, in my view, what is the leading agency when it comes to being content forward and digital first. A lot of analogies have been used. I mean, Bloomberg is obviously owned by a financial services company and then has a media entity. In terms of analogies out there, I think there's actually a different analogy here that's a little bit more applicable. And that is, you think about Apple under Steve Jobs in the 1980s and early 90s. They actually brought in Chiat Day, which had been their outside marketing agency, and created something called the Apple Media Lab. And it really became a model for how to build in-house marketing in an age when a lot of that marketing was done through what we would now call traditional advertising. Yeah. We're in a different age today. Digital is at the center of the conversation. And I see this as analogous to that, but for the digital age. We're bringing in, really, I think, the best agency in the world to help us do the best job we possibly can do as we continue to grow in terms of how we market and communicate. So I'm totally pumped for this. I'm really excited.
When you came on to talk about that communication, that potential of policy initiatives as well, Chris Lehane, we always wish we had another 10, 15 minutes with you. Chris Lehane of OpenAI.
I thought we were going to get to talk about the NCAA championship tonight.
Next time. We'll go off air for that. Chief Global Affairs Officer, we so appreciate you tuning in today and joining us. Meanwhile, coming up, a new show. Well, it's poking fun at the Silicon Valley so-called bubble. We sit down with the creator and star of the new AMC show, The Audacity. This is Bloomberg Tech.
Genius is not about figuring out the solution. It's about being unhinged enough to do something outrageous with it.
Fear impedes innovation. Whack. I call that self-police brutality.
Tech lives matter.
Exactly.
That was a bit of the trailer for The Audacity. It's a new, shall I say, dark comedy coming to AMC, set inside the bubble of Silicon Valley. Pleased to say the show's executive producer, Jonathan Glatzer, is with us, as well as one of the stars, Billy Magnuson, who had slightly longer locks. Great to have you gentlemen on.
The perm. Thank you so much.
Let's poke some fun, or let's have some reality check as well. What a time to be writing about what maybe you're presenting as masters of the universe in some way here. How did this come to bear? How relevant is it for our time?
I think it's extremely relevant, but it is one of these funny things with television. You write it a year or so before it actually airs, so you're guessing at what might be relevant. And it's a difficult thing to chase, obviously, with tech. It's just moving way too fast to try to anticipate what the next thing is going to be. I think we managed to do that. It's kind of like sometimes the Defense Department brings in screenwriters to say, like, what would a great weapon be of the future? In a lot of ways, that's what we did in terms of like where we thought tech was going. The therapy bot, things like even aspects that were major news items, like what happened with the VA and Doge and everything like that, is a major story point for us. But we wrote it before that actually happened.
Life imitating art.
Indeed.
Billy, what's interesting is, well, the X Prize actually is going out there at the moment wanting people to come up with more positive views of how technology is going to change, because they want the next phone in the way that was inspired by Star Trek. But for you, how did you get into character? How did you think about this tension that we have of utopia versus, well, dystopia?
Oh, that's quite interesting. I'm basing, as an actor, you take in, you decipher what you see out there. We know all the people in the headlines. We know who is in the tech titans of
Who are you most fascinated?
All of them, to tell you the truth. I don't want to put names out there, but we know who they are. And then you just take the good, the bad, the ugly, and then you try to build a character through all that and make this melange of a character that I was like, okay, what's interesting to me? What's scary to me? It's just, they're out there. We see them. We know who we are. And the best part about Jonathan Glatzer making the story, there's the tech titans, but Duncan Park is right under them, and he is hungry for it. And it just kind of shows a little bit the toxic nature that can seep into these guys who probably genuinely, when they started, they had hope and had hope to build something positive for the world, and then greed, corruption, all the beautiful things that we see out there seeps in.
So beautiful. Yeah. And I think it was important also for him to be a wannabe Titan, for that desperation to be there to fuel the story, but also to not necessarily be influenced by the fame and the spotlight that the people at the very top of the ladder, we see them be like rock stars. And I feel like that desire to be amongst them, it was so important, but not actually being one of them was I guess.
It's a fun world he's created. Actually, it's not. It's just, again, our job is to show a little bit of a mirror to reality. Oh, hey, I hear
Billy,
you.
No, I know you don't want to name names, right? So your character is an audacious data mining CEO. I can tell you having
Which
been in
is,
Silicon Valley for a decade.
Agree that's like the oil of that industry?
So how do you prepare for that character? So there are some real world examples out there of the audacious data mining CEO. Go through the process.
The process of it, honestly, it's just looking and regarding what's out there, and then you slowly just pull back each little layer of it, and you make a beautiful dish out of it. And I think that's the fun part. Again, the world was created in Jonathan Glatzer's mind, and like to have one of the most profound writers of our time, and I'll quote me on that. I think he is absolutely exceptional. That playground then is created for me just to dance on, and I couldn't be more grateful to be a collaborator with this fine gentleman to my right.
Likewise.
Jonathan, I want to respect the specifics of the audacity and the distinction in genre almost, but I came to San Francisco in 2018 with several seasons of Silicon Valley under my belt, right? And that show so closely aligned with the culture, satirical, poked fun at what it is to be at maybe the lower end of the spectrum, the startup, small scale, early stage. How conscious of that were you, that exists out there, and how much you wanted Audacity to be representative of all of the capital that's here, intellectual and financial capital that underpins the technology industry?
I think that I was a huge fan of Silicon Valley myself. It's brilliant, brilliant satire. It definitely is about a time in the Valley that was a little bit more optimistic, the garage incubator type of culture, and that striving to make it to a place which is, as I said before, is part of what Duncan is going through. But Duncan Park, the character that Billy plays so brilliantly, he had a company prior to this called Fafa, which was about bringing people together, and they would be trading candles and canoes and stuff like that. And then he became a data merchant, a third-party type of data merchant. And I think that what we're showing in our, it's a very different show. It's a much more of families interacting. There's a psychiatrist is the second lead of the show. But the idea that everybody back in the day was truly optimistic in a genuine way, that they were going to be bringing people together. They were going to lower the barriers in terms of tolerance and people communicating together, and the idea that information is going to be something that's reliable and accessible. And that all kind of went in the opposite direction for the most part. Right. And but they made a lot of money doing it. And so it was kind of like, wait, we're sort of tearing at society in a lot of ways here, and communication has been completely bifurcated, and people don't seem to be any more tolerant, let alone all the other things that they talked about. But we're making so much money doing it. And maybe this is what people want, And so that sort of cynicism and that I think it just imbued a different chapter in the Silicon Valley story. And hopefully there's a chapter coming up. I don't know when, but hopefully there will be one where they realize that the power that they have is also the power to do good. We'll see. But
also, I love the characters he's created. It is the culture. You're examining the culture that lives inside Silicon Valley now. And I love that dynamic of the whole project. I feel lucky to be part of this project, honestly.
Gentlemen, we appreciate having you here on Bloomberg Tech, and I think I'm right in saying it's already been renewed for a second season as well. The Audacity premieres April 12th on AMC. Jonathan Glatzer, Billy Magnuson, thank you for coming by. NASA's Artemis II is set to pass at the closest distance that humans have come to the lunar surface in 50 years. 7 p.m. New York time tonight as the crew does its flyby of the moon. Let's bring in Bloomberg's Lauren Grush. Just back from first Florida, then Houston. Big moment, 7 p.m. What do we need to know?
There are quite a few big moments today. Actually, one thing that will start before even 7 p.m. is around 2 p.m. Eastern. The crew will actually break the distance record previously set by Apollo 13 of the farthest any humans have traveled from Earth. So that will kind of be a nice little lead in to the flyby. And then, this is today is the day what the Artemis II mission is all about. It's getting close to the moon and being able to see the far side of the moon, parts of the far side that humans have never seen before. So it's a really exciting day.
And it's been so exciting to watch this minute by minute, tick by tick, as this journey continues. Lauren, you've got some fascinating reporting on what's working well out there, and also what's not working well.
Right. So actually, I've been blown away by how smooth this mission has gone. Obviously, there's little glitches here and there that they'll be reporting to mission control, but overall, it seems to be a relatively smooth mission. One thing that we have all noticed is that the biggest headache might be the onboard toilet. So it kind of started acting up that first day of flight. They were able to fix it by helping to prime the pump. But then on the next day or a few days after, they had an issue with maybe some ice blockage from the vent line. They dump the contents overboard periodically, and there was kind of some blockage there. So, but they seem to get it working again. So it's just been it's been a nice comedic moment. If the only issue is your toilet, obviously it's probably not something the astronauts want to be malfunctioning, but at least that's the only thing that seems to be a real problem.
Lauren Grush, it's been some beautiful writing, some incredible reporting throughout the weekend, and we so appreciate you joining us ahead of today's really important day of space. Ed, that does it for this edition of Bloomberg Tech. Back together again.
Yeah, strong start to the week. A lot to recap. Check out the podcast. You know exactly where to find it on the Bloomberg terminal, as well as online on Apple, Spotify, and on iHeart. From New York and from San Francisco, this is Bloomberg Tech.